Ladies and gentlemen, welcome back to the channel. A complete just bloodbath across the board for a lot of areas in our markets. Apple as a notable name that is doing well today. Meta, another one that is doing okay, up a third of 1%. Apple's the real winner today, up about 2.5% after news that they are integrating AI in China with a new partnership with Alibaba. Look at Tesla, down over 6% at the time of recording this video. Absolutely bloody. The S&P is down a bit today. I mean, you could really see, though, the Russell is the big underperformer. The Russell 2000 is down 0.67%. NASDAQ down around 0.5%, and the S&P is down 0.12%. The Dow is actually slightly positive, up 0.05%, but for the most part, it is a bloodbath across the board. Now, there's a couple things we're going to talk about here in this video. Tariffs and statements from the White House. AI, the big news that came out of the Paris AI Summit, and what Jerome Powell said today. Keep in mind, CPI comes out tomorrow, and we will discuss what markets are currently expecting for the CPI report, what's going to be good, and potentially what's going to be bad in that CPI report, and most importantly, what is going to move the markets. Keep in mind, we do still have a lot of earnings. There is a ton of earnings over the next 72 hours or so, and we'll talk about this a little bit more. And as well as CPI tomorrow, we have another continuation of the Senate testimony from Powell, if that's what we want to call it. So the work is cut out for us here in this video. Ladies and gentlemen, hit that subscribe button. Hit that like button as well, because it's free 99. It costs you nothing to do so. And let's get started. Now, first and foremost, we did have some comments from, again, Jerome Powell this morning. Jerome Powell says here, once we lower rates, mortgage rates will come down. Don't know when that will be. He was asked about mortgage cost, as he always is during these Senate testimonies, and he said, we don't control long rates. We don't control what mortgage rates are. And kind of alluded that that was their job to do that. That was the Senate's job to bring down some of the irresponsible spending in Washington, and that will drive down mortgage rates, but eventually reaffirming that mortgage rates will come down. Jerome Powell says that they don't see any reason to be in a hurry, which is reassuring the labor market and the economy. And Powell says they want to make more progress on inflation. Now, we get our CPI report coming out tomorrow, and, well, the Fed doesn't want to give us hints towards what the CPI report could look like. They are saying, hey, we still need to see more progress on inflation before we continue cutting rates, which is kind of what we expected out of Powell. Jerome Powell says they can maintain policy restraint for longer if economy remains strong and inflation does not move towards 2%. Jerome Powell also says that they can cut rates if there is some kind of weakening in the economy that is currently unforeseen. Fed Hammock also came out today and just, I mean, this guy lives under a rock, I believe. He says likely appropriate to hold rates steady for some time. But he does go on to say that risks to inflation right now are skewed to the downside. I mean, that doesn't seem like the case to me, in which we actually study the data here on this channel. It looks like we're actually making a lot of progress on inflation, and, well, the labor market should be the Fed's top concern right now. There's also some headlines about the tariffs today, specifically on steel over this weekend, and really that went into effect yesterday, or the signing of those went into effect yesterday. They actually don't go into effect for about a month from now. It says Mexican Economy Minister Marcelo Ebrard says this tariff is a bad idea, while also going on to say that this tariff is not justified. Canada's Trudeau pushes firm and clear response to U.S. tariffs on steel and aluminum. Canadian Prime Minister Justin Trudeau said Tuesday he would speak to other Western allies about plotting a firm and clear response to the U.S.'s 25% tariff on all imported steel and aluminum. And Jerome Powell also went on to say that he believes the neutral rate has risen from very low pre-pandemic levels, which again is not any different from anything we heard previously. And I think that's part of the reason why markets took what Powell said today as, on the bullish side, because we didn't really get any new information, and not getting any new information is kind of seen as positive. Trump was also asked about Israeli annexation of the West Bank and says that's going to work out, so suggesting that Israel is going to take the West Bank. And Trump says that we are going to take Gaza, and Jordan's essentially president says that he will support Trump to achieve those goals. And one of the big headlines coming out from the Paris AI Summit was the United States and Britain do not sign the Paris AI Summit declaration on sustainable and inclusive AI. Now, as far as this morning, we didn't really get any data. So today was kind of the lull in data for this week. We did get the NFIB Business Optimism Index that came in at 102.8 versus expectations of 103. But when you look at this thing overall, it's still running a lot higher than it was before the election. So I would say still a good positive sign for the economy. Now, we will get some more Fed speakers later on today. Not expecting that to move markets all too much. Tomorrow morning, we get CPI. You get core month over month, core year over year, headline month over month, and headline year over year. If we take a look at Nick Timmerhouse and the compilation here of major banks and firms' expectations for inflation, we have here a median forecast for core CPI at 0.30%, so exactly on 0.3%. Last month, we were at 0.23%. Now, there's a very big difference between these numbers on a 12-month annualized basis. 0.23 times 12 is 2.76%, which is still too high, but 0.3% times 12 is 3.6%. That is way too high. Okay, so almost a 1% difference on an annualized 12-month basis between those two numbers. So on a month-over-month basis, we are expecting inflation to come in quite a bit higher than last month. Now, that's where I think the good news could come in, because as investors, we're already expecting a pretty hot CPI report tomorrow morning. If it comes in lower than 0.3%, that's going to be seen as positive, even though it may still be higher than last month. Now, if it comes in too hot, comes in hotter than 0.3%, that's where we have an issue. Now, a lot of these estimates are just way skewed because of some of the high-end estimates, okay? So some firms actually have very low expectations for inflation, and some have very high expectations for inflation. If you take a look at Morgan Stanley here, Morgan Stanley's at 0.37%, okay? You have Goldman Sachs at 0.34%, Citi at 0.34%, and even Bank of America at 0.33%. But take a look at some of the low estimates. BNP Paribas at 0.25%, Jefferies at 0.22%. At 0.22%, that would actually be lower than last month. That would be wildly bullish for markets. JP Morgan at 0.23%, Moody's at 0.23%. Okay, so there's some banks here that have very low expectations for inflation tomorrow. Some other banks that have very high expectations. You could even see Deutsche Bank at 0.28%. Let's see, Piper Sandler at 0.27%. Both of those banks are also lower than the consensus estimate on Wall Street. You have banks like Wells Fargo at 0.32%, a little bit on the higher side. TD Securities, 0.32%, again, a little bit on the higher side. UBS is 0.3%. You have First Trust at 0.31%. Employee America at 0.3%. So some of these banks are right on kind of the median estimate, but there's a big skew this time around. So CPI is really going to be the big catalyst for markets tomorrow, and it's really been the main catalyst of this entire week, Jerome Powell, yes, is important. Any tariff rhetoric, yes, is important. But it really comes down to CPI. If we're making progress on inflation, that's a good thing. And that's going to be good for stocks. That's going to be good for a broadening of our markets, for AI names, for software names, for pretty much everything. If inflation comes in on the hot side, then we have a big problem. Now, I will tell you from a technical perspective on our markets, the SPY looks pretty good. I would definitely not be betting against markets here. We, again, had been in this pattern of gap down Monday, good day Tuesday, good day Wednesday, good day Thursday, bad day Friday, gap down Monday. Good day Tuesday, good day Wednesday, good day Thursday, gap down, or bad day Friday, gap down Monday. Okay, and we kind of did that pattern over and over again. We broke that. This Monday, we actually went up. Okay, you kind of actually gapped up on Monday. Now, today is a bit of a mixed day for markets. Some areas are just really bad. Some are not as bad. S&P on a headline basis, pretty much flat. It looks like you broke the trend we had for the last 3 weeks. If CPI comes in good tomorrow, you're going to break this downtrending trend line here, and that's going to set you up for new all-time highs. And that's where you could get a much larger breakout actually in our markets, is with a really good CPI report coming tomorrow. And that could well extend the SPY, potentially even to that 620 level. All things considered, earnings season so far has been pretty good. Now, earnings season is not over with. Here today in after hours, you have Supermicro, Upstart, DoorDash, Lyft, Freshworks, Energy Transfer, Gilead, Confluent, Welltower, and Zillow Group. Tomorrow morning, you have Vertiv, CVS Health, Barrick, Generac, Biogen, Radware, Kraft Heinz, P10, RBI, and Ryder. In after hours tomorrow, Reddit, AppLovin, Robinhood, Dutch Bros, Albemarle, Kinross, The Trade Desk, Cisco, MGM Resorts. Thursday, you have Datadog, CyberArk, John Deere, Crocs, Duke Energy, Sony, and GE Healthcare. And then Thursday in after hours, you have Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. And then even next week after this, you're going to get more smaller cap names. And then the week after that, you're going to get like NVIDIA and the last final round of earnings. So earnings are still going on. They're still going to continue to come out here over the next couple of weeks. So still not out of the quote-unquote danger zone for earnings, although a lot of your big tech names have reported. And so far, well, the last one up is NVIDIA. And yes, we do get Supermicro that reports today and after hours, but from what we've heard so far, CapEx budgets for AI, it doesn't seem like we have anything to worry about when it comes to NVIDIA, especially considering the stock has fallen from all-time highs. You're not as what I would call vulnerable for a large decline. Now, CNN's Fear and Greed Index today, if we go ahead and refresh this, is coming in at the Wi-Fi has been really slow because we have a snowstorm coming in. Neutral at 47. Yesterday it was neutral at 46, so a little bit of an improvement today. Market momentum is fear. Market stock price strength, fear. Stock price breadth, fear. Put and call options, greed. Market volatility, neutral. Safe haven demand is neutral, and junk bond demand currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, last we knew over the past really couple of weeks, markets have not been in a good place. Okay, and this is one of the reasons why I've told viewers of this channel that, you know, from a statistical standpoint, now is probably not the most ideal time to get bearish, because you know, so many people are bearish right now. So many stocks are just not doing well overall. And when you're faced with that kind of setup, typically it's a bullish one, not a bearish one. With that said, only 48.47% of stocks are trading above their 50-day moving average. So half of our markets are not even above their 50-day moving average. That's, again, a bullish setup from a contrarian standpoint. Now, also, as I've spoke about before here on this channel, Bearish investors last week hit a one-year high at 42.9%, neutral investors at 23.8%, and bullish investors at 33.3%. As a contrarian indicator, that is a good time to be bullish, not a great time. At Treasury yields today, following Jerome Powell's testimony and some of the tariffs that were put on the steel and aluminum industries, you can see 10-year Treasury yields are up 3 basis points today. I think some of that likely just has to do with jitters around CPI tomorrow. These days, it's really a sell first, ask questions later kind of market. For an example, a lot of investors right now are just nervous coming off of, really good last couple of years in markets. As trade tensions kind of boil up, they're like, we have good profits now. We don't want to risk any major event. Okay, so there is a lot of risk off nature right before we're getting these big events like a CPI report, and especially one that is as critically important as this one is. Now, if you actually listen to Powell today, you did kind of get a bullish, a dovish kind of tone towards Powell. I think Powell overall was pretty bullish, but Powell's not going to come out and say, hey, CPI tomorrow is going to come in really good, or CPI is going to come in really bad tomorrow. But reading the tea leaves there, he did sound more bullish than not. And that's just an observation that I made. And that's mainly why I would say markets were actually rallying during Powell's testimony. It wasn't until more of the trade war headlines came out, the Gaza headlines came out, and all of those headlines came out that markets started to reverse. So 10-year Treasury yields up 3 basis points today really doesn't tell me a whole lot. Again, it's sell first, ask questions later, and Treasury yields being up just means there's selling pressure in the bond market. Tomorrow's CPI report is also going to do is it could kind of change some of the pricing in for the next Fed rate cut. So currently the markets are expecting the first Fed rate cut, or the next Fed rate cut, July 30th. I think that's definitely going to get pushed to June 18th. So pulled forward coming tomorrow after the CPI report, as long as it's good. But you really want to watch May 7th, 2025, and the next Fed meeting, March 19th, 2025. Because if that CPI report is really good, you could see the odds for rate cuts either March 19th and March 7th go up. And if those odds go up, that's going to likely drive down 10-year Treasury yields and likely move our markets higher. So despite some of the pain that you're seeing in different areas today, I actually think the setup for the S&P on a technical basis looks pretty good. I mean, you're above your 20-day moving average at $601.22. You broke the last 3-week downtrending pattern. We didn't get any signs from Powell that inflation is a problem. He didn't sound super bearish, like tomorrow is going to be a bad CPI report. So I'm optimistic for these reasons, and the fact that people are so bearish. Half of our markets, more than half of our markets, are in an active decline, and a 1-year bearish high, like that's usually a really good setup for markets, not a bad one. Again, just my thoughts, just my take. Let me know what you guys think about this down below in the comments section. Have a fantastic rest of your day. That is going to do it for this video, and I will see you in the next one.